Welcome to the Australian Business Executive Podcast, where we speak with Australia's most influential industry professionals on the business and economic development issues taking place across the country. You can stay up to date with all our content, including our magazines, podcasts and videos, by visiting www.theabe.com.au and clicking on subscribe.
Angus Sedgwick is the CEO of Tim Finance, one of Australia's fastest growing providers of cash flow funding solutions for Australian businesses. Angus commenced the business, previously known as the invoice market, in February of 2014. And over the last 6.5 years, Tim Finance has funded over $850 million to over 400 Australian businesses. So thanks for joining us today, Angus.
Thank you, JC. Thanks for having me.
So, give us an overview of Tim Finance.
So Tim Finance, as you just said, is a provider of cash flow funding solutions to Australian businesses, and we deliver those solutions through a range of products, specifically known as invoice finance, trade finance, and supply chain finance. So just quickly on each of those, invoice finance is where we advance money to a client against their unpaid invoices so that they can bring forward the cash that's owed to them from their customers and use it within their business today, rather than having to wait for the credit terms that they've offered their customers. Trade finance is where we provide a debt facility to pay their suppliers, so that, for example, they may have a purchase order that from a customer, but they don't have all the funds they need in order to buy the supplies to deliver on that purchase order, or they may have the funds but they would prefer to use third-party funds and keep their capital for other opportunities within their business. And that market is for businesses turning over between $1.5 to sort of $20 million a year. Most of our facility sizes are between sort of $300 to $1 million facilities on a revolving basis. So that's the value of their sales on a monthly basis. The third product that we offer is supply chain funding, which is a service to the very top end of town, 500 million plus type businesses, that provides a program to allow for early payment to their supply chain, but are very, very different to the SME market that we service with our invoice and trade finance. The business, I started the business in February of 2014, originally called the invoice market. It was originally a peer-to-peer funding platform, in that the capital that we received to make available to our clients, we got from a panel of high net worth investors. And over the couple of years, I built that out, and we had about 28 different investors on the platform providing capital, but we restructured the business in 2017 to become a balance sheet funder. So we secured our own funding lines from the investment bank and moved to becoming a balance sheet funder, so our own debt facility, if you like. We also, within the invoice finance product, offer a whole range of different invoice finance solutions. So whether that's selective invoice finance, so a client can pick and choose which debtors they want to finance, through to the more traditional full ledger facility, where they upload their entire ledger and we advance against the value of the collateral of their ledger. So the industries we service are Australia-wide. We're based out of Sydney, but we have clients all over Australia, and typically the industries would be labour hire, wholesale, manufacturing, mining services, advertising, transport, storage, telecommunications, and a whole range. Basically, any business that's providing goods or services to another business, it needs to be a B2B transaction, on credit terms, so not on cash sales, has the opportunity to utilise invoice finance within their business.
Okay. It is your business, so can you tell us a little bit about your own financial background?
Sure. I completed a business degree from University of Technology in Sydney many, many years ago. Then I had 25 years in the financial services industry, including 15 years with a company called PolicyLink, which was the largest traded policy broker in the world. And that's quite a unique market segment of the life insurance industry, which was buying and selling second-hand or traded policies, endowment policies from policy owners that no longer wanted to keep them. So rather than surrendering them back to the life company, we created a market for them to trade at a premium, and that was a very, very successful business. So I had spent 10 years running PolicyLink South Africa, living in Cape Town in South Africa. and we built that business to be the largest of its kind in the world. I then relocated back to Australia in the late 2000s and spent several years back in the financial planning space, completed my diploma of financial planning. And then one of my colleagues from the Policy days approached me to commence the invoice market in early 2014. So my background has always been in business services and financial related businesses.
Okay. What do you think makes you different from other lenders who operate in this space?
Yeah, look, Jess, that's a good question. Look, at the end of the day, the basic principle of cash flow finance is to help a business release cash against their unpaid invoices, and on trade finance to basically provide a loan facility to pay for their suppliers. So that all finances do that. If you're in cash flow funding, that's what the business is. However, we believe the key differentiator for Tim Finance is our flexibility to provide solutions to clients that may not always fit inside the box, and to work with our clients to find solutions that work for them rather than forcing a product onto them that may not necessarily meet their needs, but is the product that we provide. So I guess I'd like to think that we're a dynamic business with the ability to make credit decisions and funding decisions quickly, rather than be a large bureaucracy that is such as a bank or some of the big players in the space who basically say to clients, this is the way you must do it, rather than the other way around, working with the client to find a way that works for them.
Okay. Debtor financing is the service, but are there any common issues that clients are coming to you with?
Yes, there generally are. And at the end of the day, a business cannot grow and take on new clients without access to cash. And typically, a business needs to invest in new machinery, staff, infrastructure, etc., in order to scale. So for many businesses, the largest asset on their balance sheet is their accounts receivable ledger. What that is their unpaid invoices that are owed to them from their customers for goods or services that they've delivered on credit terms. However, if the accounts receivable ledger is a non-performing asset in that it provides nil return whilst it's sitting there because their customers are using them as a bank for the period of time that they've agreed to give the credit. Does that make sense what I'm saying there?
Yeah, of course.
So the customers are using their supply chain as a bank, effectively.
Well, we know this happens a lot of the time. Larger companies will delay those invoices out to 120, 180 days for as long as possible.
Yeah, that's exactly correct. So to access the cash is generally the biggest impediment that where clients come to us. They come to us and say, well, prospective clients and say, I've got a cash flow hurdle or a cash flow pinch. I'm making good sales, but I'm not seeing the cash. And that's the key differentiator between making a sale and having cash at your bank is the timing difference between incurring the costs, the OPEX costs to make that sale and actually receiving the cash from that sale. There's often, as you say, 30, 60, 90, in some cases 120-day difference between those two points in time. So I see all the time the businesses that have strong demand for their product or services, but they're unable to deliver on that demand due to the constrained cash flow. Yet they actually have the cash they need locked up in their balance sheet. And that's where invoice financing can really come to its own.
Finance is particularly one of the industries where unless you work in it, similar to like accounting, you don't really know the ins and outs of it. Are there any business or finance lessons that you've learned that you're comfortable sharing?
Yeah, sure. Probably three key ones. Have a cash flow plan. I see a lot of business owners have marketing and sales plans, but most don't have a cash flow plan detailing how the business will fund the new sales. As we said, providing credit terms is a commercial requirement in today's economy. So unless they've planned how they're going to bridge that timing gap between incurring the OPEX and making the sale and actually being paid by the customer for that sale, that business is almost guaranteed to fail unless they've got a plan to bridge that gap. 2, cash is king. So understand the power of having cash in your bank account, and invoice finance is the best funding solution to achieve that for businesses that are making B2B sales on credit terms. And then 3, by bringing forward a business's cash flow, they can negotiate discounts with their suppliers for early payment rather than them using their supply chain as a bank as their customers are doing to them upstream. So by having the cash, they can go, by using invoice finance to bring forward their own cash that's owed to them today, using money from Tim Finance, for example, they can then go to their own supply chain and say, look, I don't need to take credit terms from you. Why don't I pay you COD, but I want a 3, 4, 5, 7, 10% discount for cash? And generally they'll be able to negotiate some sort of discount from their suppliers for that. And by doing that, by being strategic in how you use your sales and the cash from those sales, you can actually turn invoice finance into its own profit center, because the value of the discount you can negotiate with your suppliers can be greater than the cost of using invoice finance. Plus, it's also bringing forward that cash flow so you can continue to grow your business and take on new staff, buy machinery, buy the supplies. As I said before, a business can't grow without access to cash because they get this big purchase. So we're seeing a lot of it at the moment in this COVID-19 environment where PPE, personal protective equipment, there's a great demand for it, and suddenly there's a huge opportunity for business that have access into Chinese factories and other manufacturers to deliver that stock into Australia. But they need the money to pay the supplier, we see that regularly. There's opportunity, but there's not cash. That's where strategic use can really help.
Okay. This leads into my next question, and you're already talking about it at the moment. And from when we agreed to initially do this piece, the situation has changed. People will listen to this podcast not only now but into future. So I don't want to limit it to what's happening with the COVID situation, but more broadly speaking, what's taking place from an industry perspective within finance?
Yeah, so obviously you mean as a result of COVID and the restrictions that have been applied over the last couple of months?
Oh, I was even going to say prior to that, more generally, because if people come across this in a year from now, we don't know how relevant COVID's going to be to the situation.
Let's hope not. But sure. So look, cash flow funding in Australia is at an interesting point in its history, if you like, because internationally, throughout Europe, the United Kingdom, the United States, cash flow finance, or more specifically invoice finance, is very much accepted as the number one form of business finance because of what I've mentioned before. Credit terms are a commercial necessity for businesses to operate. So business owners understand that in order to bridge the funding gap between making sales and getting paid for those sales, they use invoice finance. So it's very, very widely accepted as a normal business funding solution. Whereas in Australia, a lot of business owners don't even know what invoice finance is and that it's an available solution for them. So part of the role of all invoice finance companies such as Tim Finance is to educate the market about the power of invoice finance, how to access it, what it is, and how it works. And so that's an ongoing role that we're playing. Some people have heard of factoring, for example, in Australia, and there's generally a negative connotation often around the term factoring because of in the past, the factorer, being the financier, who took control of the client's entire debtor ledger, including collections of the debtor ledger, might have been quite aggressive in the manner in which they managed those debtors, and therefore, it may have had an impact on that client's business, and therefore there was this negative connotation. Whereas we don't do factoring. We're invoice finance is provided by Tim Finance is just simply a funding solution. We leave the management of their debtors to the client, as it should be. My belief is that our client is our client, their customers are their clients, and they should continue to manage that relationship. So, as I said, the education of business owners around the power of invoice finance is one of the key things, and helping them to learn about it and understand the power of it. Now, that's a difficult challenge in that obviously in the modern world we live in, where we are bombarded with information all the time. It's how do you differentiate our message and get it out of the clutter? Because it is an important message, and doing things like this, I think, hopefully helps. But that's the challenge that we face. Because if you look across the whole debtor finance industry with all the players that are in the space, it's only about 5 or 6% of the SME market that actually utilises cash flow funding solutions.
Well, look, Angus, that's really all the questions I was going to have for you today. Before we finish up, is there anything else you'd like to add?
No, look, other than, if anyone would like to get more information, I'll invite them to visit our website, timfinance.com.au. My contact details are on the website, and feel free to reach out to me with any questions, or if you just got a scenario that you'd like to run by us and see whether it's something that would assist your business. Then please feel free to reach out. Obviously we mentioned COVID. We are living through uncertain and difficult times at the moment, and but having said that, I do believe that post COVID there'll be strong business opportunities. So I'd just like to wish all your listeners the very best as we move through these uncharted waters, and if we can assist in any way, please feel free to reach out.
Excellent. Well, thanks for your time today, Angus.
Thanks, Jesse. Nice to chat.
This has been a production of the Australian Business Executive, a division of Romulus Rising Proprietary Limited. All rights reserved. You can stay up to date with the Australian Business Executive, including our magazines, podcasts and videos, by visiting www.theabe.com.au and clicking on subscribe.